All right, Mum. Well, thanks for the heads up. Yeah, I'll think about it. Thank you. Bye. That's weird. Just come off the phone with my mum. She said interest rates are going up. I need to stop property investing. She says that she's really worried about me and I should maybe start selling some of my portfolio off. Love.
Hello.
Hello. Could I just have a quick word?
Yeah.
It's all right. I'm a little bit worried. My mum's just rang me.
Okay, do you want to shut the door?
Yes, please.
Alright.
I really need some help right now.
You need some help? Oh my
I
god.
do.
Alright, so...
My mum's just rang me saying that she's very, very concerned. She's seen a newspaper article, interest rates are going up, and she thinks that means that my property portfolio won't be sustainable, and I should start selling some off.
Okay. Your mum's seen something in the newspaper and she's gone, you need to sell your properties.
She said I wasn't around or old enough to understand what happened the last time, but apparently the last time it was very bad, and lots of people lost houses.
So, let's just take this one step at a time and go a little bit deeper.
Perfect. Welcome to Property Investing with Abby. My name's Abby, I'm a property investor, mum of two, I've got a property portfolio and I like showing you guys what I'm up to. So in today's video we're going to learn about interest rates. What does that mean to us property investors? What does that mean to you if you're thinking about getting into property? And how can you look after your property portfolio and keep yourself safe if interest rates are going to go on the up?
Okay, so let's do this one thing at a time, shall we?
Yes.
Is this the same mummy that didn't want you to invest in property?
Yes.
Was that 3-4 years ago?
Yes.
Okay, so what did mum say then? When you said, I'm going to go buy some properties?
Thought it was all too good to be true and
And-
that I would get into financial difficulties and probably become bankrupt.
Bankrupt, that was the word I remember. And your mum's obviously not doing it. She's coming from the right place. She's
Yes.
trying to help.
Yes.
Over the last 3, whatever it is, years since you didn't take your mum's advice, how many £1 million worth of property you got now?
Oh, 3.4 million.
3.4 million. And how much does it cash flow? How much profit do you make each month, year, whatever?
Monthly about £9,820 odd pounds.
Perfect. So let's not react emotionally. Shall we just do the numbers?
Yes.
What's the sort of rough loan to value? You're sort of 70, 75%, do you know?
Yeah, I think around 70.
70. So can you go on there
Yeah.
and pull up the BBC mortgage calculator? Now, I can do this in my head, but maths isn't maybe your strongest thing, is it?
I can't do it in my head.
Yeah, so we'll do it gradually. 3700, £3.7 million of property.
Oh, it's 3.4. Sorry.
Fair enough. Let's try again.
3.4, yes. Enough zeros.
Thanks for having me as a guest when you're property investing with Abby, by the way.
you.
I feel all grown up.
Well, I think a lot of people have got the same sort of challenge as me. Interest rates are rising, we've seen it, and we know inflation's going to go up, and we don't understand how that's going to impact us.
Yeah, well, and just so you know out there in internet land, Abby's grabbed me just as I was about to walk home, hence the not very, work-like attire or whatever. This is what I normally look like. When I was talking to Abby, I said roughly, 75% loan to value. Abby said roughly 70%. Now that means Abby's got mortgages of roughly 70% of that 3.4 million. That means Abby's mortgages are 2.38 million. Can you put in that BBC mortgage calculator,
Yeah.
2.38 million. Is yours interest only?
Yes.
Yeah, so the term doesn't really matter, but let's put 25 years.
Yeah. 25 years.
And what's the sort of typical percent interest you're paying at the minute?
Probably 3.5 to 4%. So I've got
Fine.
commercial mortgages.
Yeah, so put 3.5
Yeah.
and then calculate.
Yeah.
So your monthly repayment would be how much?
£12,033.
So that would be if Abby had repayment mortgages, but she doesn't. So your payment will be interest only. So
Correct.
what's interest only?
£6,941.
Abby's mum's question, whether she realises it or not, what rate would interest rates have to get to obliterate your profit?
Correct.
So this is called a stress test.
Yeah.
I don't know, does your mum often stress you? Joke.
I'm not saying.
Not saying, all right. When anybody says to me, you're going to go bankrupt or whatever, what I do is I work out the interest rate
Yeah.
at which my property will stop making money. It's literally a financial stress test.
Yeah.
So what we're going to do now is we're going to keep increasing the interest rate until you add on your monthly profit. Can you read out the interest payment at the minute?
6941.
That's what Abby's paying now, roughly.
Yeah.
And how much profit do you make per month?
9,800.
So I'm going to plus 9,800 to that figure, which is 16,741.
Yeah, that sounds about right.
So in other words, if the interest rates went up so much that it stopped you making any money, there'll be an interest rate at which you just start breaking even instead of making a profit. And even if your properties aren't making you any money, you're still not going to have to pay in or go bankrupt. And that will pretty much be worst case, yeah?
Yeah, yeah.
What I want you to do is keep increasing that interest rate until you get to 16,700. But just before you do that, do you read all the notes from the MPC?
No. Do you?
Yes. The last Monetary Policy Committee meeting for the Bank of England, all the markets thought that interest rates were going to go up. Because you're paying, you said 3.5%, whatever it is, but the base rate, the Bank of England base rate, is only 0.1%. So the first problem that most people have got is they don't actually understand the difference between the base rate, the Bank of England base rate, and the actual interest rate they're paying.
What they're paying, yeah.
So if you're running a bank, you have to make some margin, otherwise you can't pay your staff.
Yes.
And so there is a relationship between the base rate and the interest rate you pay, which essentially is the bank's margin.
Yeah.
But the higher that base rate goes, the smaller the margin can be, if that makes sense.
Yeah.
Because no bank can make money by lending money at 0.1%, can it?
No,
That's just,
no.
There's a natural shield in there in that the higher the base rate goes,
Yeah.
relatively smaller the margin becomes.
Yeah.
The Bank of England said in the last MPC that interest rates were inflation was roughly 4.5%. Why is that relevant? Well, interest rates classically are seen as a tool to control inflation. So if you increase the cost of borrowing money, people will buy less, demand will come down, and therefore inflation should drop.
Yes, yeah.
Now what they've said is that their expectation is that in the end of the first quarter next year, they'd expect UK inflation to peak and then start coming down again.
Yeah.
And they expect it to peak about 5.1%,
Yeah.
which is that's a lot by historic,
Yeah.
versus the last 20 years.
Yeah.
What do you think the bank is saying that they expect the interest rates to be a year from now? So all these people that are panicking, oh my God, interest rates are going to go up. The Bank of England actually tell you what they think it's going to be.
Yeah.
They're talking about a gradual increase, potentially, of another 1.5%. As a first step, let's say the margin doesn't get any smaller with your lenders, which I think it will, but let's say you added 1.5% to your borrowing costs. So instead of 3.5, you're now going to be at 5.
Yeah.
Calculate.
Yeah.
What's the answer?
It'll be 9,916.
So it's gone up.
Yeah.
9,916, but that's way less than 16,700. So you'd still be making £6 or £7 a month.
Yeah. So
You okay with that?
Yeah, I'm fine with that. I'm happy with that.
Almost my worst case scenario is that I would expect by next Christmas.
Yeah.
Maybe that's happened. So let's now keep increasing it until your interest payments become 16,700. So maybe go to 7%.
7%. That goes to 13,883.
That's still less than 16 grand. Still making £3 a month.
9%.
Whatever you want. Your loss.
17,850.
Okay.
So about 8-9% is break even, isn't it?
Well, let's go for 8.5.
Let's go for 8. Yeah, boom, break even.
So on Abby's portfolio, the interest rate break even point is 8.5%. Now to get to 8.5%, that would have to be a minimum of 5% increase on now. There's all sorts of reasons why I don't think that will happen. So for instance, I don't know if you know that out there in internet land, everybody, but the government is a borrower too, yeah? We've got a national debt. So if the national debt repayments went from 1.5 to 5, 6, 7% interest, that will be huge.
Yeah, it will.
And fundamentally, UK PLC would be bankrupt at that point. So structurally, the nature of our debt and long-term interest rates has changed because we're so indebted as a country.
Yeah.
But let's have a look at something else. I mean, Have you seen any rent price inflation?
Oh, massively over the last year, 18 months.
So what's causing that? There's more tenants than properties.
There is a lot more.
So if the cost of providing a property went up because the landlord's interest rates went up,
Yeah.
do you think that would put upward pressure on rents?
Oh, yeah, definitely.
And what choice would the tenants have?
They need somewhere to live. Yeah.
So you've got a natural dampener
Yeah.
where if interest rates go up, rents go up with them. So the question back to your mum would be, she was my mum, do you think I'm going to have to pay 8.5% for my mortgages anytime soon? Because I think that's inconceivable.
Yeah.
If you wanted to protect yourself against future interest rate rises, mortgage interest rate rises, how could you do that?
Do you fix your mortgage for a long
Could do.
term?
So let's Google best buy-to-let fixed rate mortgages. Oh, Coots, you got expensive taste. Private bank, that's the Queen's Bank. Abby's just gone on the Queen's Bank website. Okay, so look at this. You got a 2-year fixed, a 3-year fixed, a 5-year fixed, a 10-year fixed. So if you wanted to de-risk your portfolio, can you just maybe read out that 10-year fixed one?
At 10-year fixed, the rate 2.09%.
This is a buy-to-let, isn't it?
Yeah.
And then the max loan to value?
This one's saying one of them's 90%.
Blimey.
It goes from 60 to 90%.
So there's obviously going to be some terms and conditions with that.
Yeah.
I mean, if I could get a 10-year fixed at 2%, I might do it myself. In fact, what's the website? Open that up, see more. To tell you who it's with. Oh, TSB.
TSB.
Yeah, so TSB is offering a 10-year fixed at just a smidge over 2%. And actually, house in France, I don't know, do you know this, Abby? I've taken a 20-year fixed mortgage of our house in France with BNP at 2.1%. So I'm not worried about interest.
No.
I mean, it's fixed.
Yeah, exactly. Yeah, fab.
Okay, so how else could you make sure that interest rate rises don't affect your property portfolio? What do you think out there? Comments below. What else could you do? How about if you didn't actually own the property and therefore you weren't paying interest?
That is very true.
So what kind of strategies could we use there, Abby?
Do rent to rent.
Rent to rent.
Or you could do a lease option
Lease
and
options.
fix the purchase price for £1.
Hope you're writing this down at home, everyone. This is how not to go bust if interest rates go through the roof, which they won't.
Yeah.
They won't. I mean, I do predictions every year. Everybody, I'm not kidding, everybody and their uncle last year at Christmas was saying property prices were going to crash.
Yeah.
Do you remember?
I remember, yeah.
What did I
Yeah.
say?
You said no,
What happened?
they didn't.
How
They
much?
continue to increase.
How much the property price has gone up in Yorkshire?
14%.
So all the experts were saying we're going to crash, burn and die, and we didn't.
One of the questions, and I know I'm going to get it as a comment on this video because I get it a lot from people that watch me, is, oh my gosh, you've got over £2 million worth of mortgages. That's insane. What would you say to those people?
I'll quote Richard Branson. Richard Branson said, I think I'm right in saying, by the time I'm 55, I want more than 1 billion in debt. But this is the whole good debt, bad debt argument, isn't it?
Yes, yeah.
So if you're borrowing money at, in your case, 3.5%, but it's making you 8.5% because you just worked out the break-even
I did,
rate.
yeah.
So and that's ignoring capital growth.
Yeah, true.
So,
yeah.
which you shouldn't. If you're borrowing money at 2-3%, but you know you can use it to make you 8%, 10%, why wouldn't you?
People say a lot to me, oh my gosh, I can't believe you like my ex-husband, how can you sleep at night with all these mortgages on you? But then we don't seem to ask the people who, just get credit for new TVs, settees, and they're never going to make them money.
Payday loans.
My debt makes
interest.
me money. Thank you, Paul, that put my mind at ease.
Perfect. So the answer for your mum is 8.5.
8.5%. Brilliant. So thanks for tuning in, guys. I hope you found it really useful. I did. And that's the power of having a mentor. When you're not sure, when you've got people that aren't 100% property investors telling you different things, your mentor will keep you straight and narrow and help protect you and your portfolio. So huge thanks to Paul. Now, during that video, Paul said a really massive thing that really made me think I haven't worked it out yet.
And that's ignoring capital growth.
Yeah.
Which you shouldn't.
Property prices have gone up by 14%. My portfolio is worth 3.4 million. So what's 14% of that? And I have just done it. £476,000 my portfolio has gone up with in the last 12 months. I've not done anything. My portfolio's been there and I've nearly made £500,000. Anyway, I love property. I hope this has inspired you. If you haven't already, I would love to invite you to one of our Wealth Through Property events. It's 2 days with me, Paul, and the team, and it's to get you started in property. Or if you're already in property, we're going to show you strategies that you might not have even thought about. See you soon.